Hello and welcome back to Swing Trading Masterclass by Wealthy Education. In this video, we're taking a look at Fibonacci retracements and extensions. So Fibonacci sequence, Fibonacci numbers are a mathematical sequence that were discovered centuries ago. Multiple mathematicians have found it, but Fibonacci was Leonardo Fibonacci who released a book in 1202 coming out of Pisa, describing this, and basically all it is this. So you take two numbers, you add them together, then you take the last two numbers, and then you get the answer. And then you take these two numbers, and then you get this. And then you take these two numbers, and then you get this. And what he found was the ratio, which is actually 61.8%, okay? It's called the golden ratio, is everywhere in nature. So, like, petals of a flower quite often will use the ratio in growth patterns. Mountaintops will have the ratio from peak to valley. Rivers will bend in the ratio. Now, there are other Fibonacci ratios, like 38.2%. I don't want to get too heavily into the math because that in and of itself is an entire mathematical study. There's plenty of information on the web if you really want to know the mathematics behind it. But the whole idea is that these are repeating numbers throughout nature. So somebody got the bright idea of, hey, let's apply this to trading. Now, over here, this is the pitchfork menu. You have the fib retracement and trend base fib extension, as well as time zones and a few other more obscure fib circle, fib spiral, things like that. So we're going to stick with the retracement and the extensions. And quite frankly, 95% of Fibonacci work out there is the retracement. So the idea is, what if you had an area to pay attention to when a market pulled back to find support or resistance to continue the trend? You know what I mean? Like, you're shorting this and you're trying to find a place to sell it after a bounce. That's the whole idea behind this. So Fibonacci retracement, you click on the swing high or swing low, depending on which direction you're going, and you drag it down. So in this case, this is a swing high. And if we get down here, this is a swing low. And you'll notice that the 61.8% is where we stopped. And that's the whole idea behind Fibonacci. Now, there is a very heated debate as to whether or not there's anything to Fibonacci. One thing that kind of sticks out is the 50% retracement level is one of the most common levels used, which actually isn't even in the sequence. That goes back to stock traders looking for half the position to pull back and start buying, like to find, value or whatever. So, at this point, they normally have the 76 and the 23. Most traders don't use it, so I just put them on there just to show you that those are two of the levels that they do pay attention to. I mean, some traders, but 23, 76 are the least important. So most people just stick to these. So you can see that when that was a swing high and that was a swing low, then the 38.2 offered resistance. When we made that move later, then 61.8. And then when we made this move later, 61.8. Well, that kind of brings up a problem. And the problem is, it depends on which one you're looking at. So the best way to use retracements is to line this up, okay? And then on a move later, for example, So the second move, the first fib has found this area to be resistive right here at the 61.8. You can see that the second fib, which lays right on top of it, offered resistance as well. And that's something called confluence. So the idea is you're taking Fibonacci traders from both of those moves. And, since both of those groups of traders should be looking for resistance there, that's where you want to be involved. You can see it does work on all time frames. So like on this massive swing lower in Bitcoin, you can see that 38.2 offered resistance. You can also see that when we made it up here and pulled back drastically, we found buyers between 38.2 and 50%, right? Basically 38.2. JP Morgan, I've already got an extension drawn. I'll explain that in a second. But let's go ahead and do a fib retracement just to show in an uptrend again. So this is your bottom. Now this would have been an example where the 23 probably came into play. Now, some things that you want to do, you do want to pay attention to is that when you pull back, the shallower the pullback, the more momentum you're probably going to have. Like from here, we pulled back to the 38 from this double top. Double top, something that you'll be talking about later here in the course. You can see we pulled back to the 61.8 after this massive meltdown, this golden ratio, and bounced quite significantly. Now, I previewed the extension. Now, the extension, trend-based fib extension, the extension simply tells you where a trade may go. So, for example, if you were in this for this move, and you're dragging from the swing low to the swing high in this case because you're talking about uptrend. Well, this tells us where, based upon Fibonacci mathematics, if we break out above what was the swing high, where could we go? Well, 61.8. So this was actually 1.618. That's a target. That is, one way that you can use Fibonacci as well. This Bitcoin one. So let's do this. Trend-based fib extension. You click here. You click here. You drag right back to where it begins. And then you can see, once we break out above here, we hit that 1.618. Goes back to that golden mean. And euro dollar. Remember this move here. Click there. Click there. And you can see that we did eventually hit the 1.68. If you pull it down to here, then we haven't yet. We don't know. But the target would be down here at about 111. So again, like with Fibonacci retracement, you want to find confluence. You want to, if you can, you want to find multiple. Now I'm going to tell you again, 95% of what you're going to read as far as analysis is concerned is the retracement. So that's by far much more important. Like anything else, it's more important on the higher time frames. So like here on the weekly chart, do a fib retracement, and it means a lot more that the 38.2% is right there. You want to find, hopefully, support and resistance at the same place anyways. And if that's the case, then this brings up another question. The question is, does Fibonacci work, or is it just support and resistance lining up? That's open to debate. You have people that swear by Fibonacci, and you have people who swear that it's useless. It's entirely up to you to use, but basically it gives you an idea of where the market may turn around. There are enough people out there that use it that it makes it somewhat of a self-fulfilling prophecy. So we will use it in this course. You don't have to use it in your trading if you don't feel like you should, but we will show Fibonacci as one of the many tools that you'll learn.